Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for March 16th, 2022. One last commo check. You still okay? Okay. Hey, so this was a pretty neat notice that I got today that Martha Stewart online really likes the creativity of Angus Fletcher, my research partner from Ohio State, who's working with us at the Command and General Staff College. So they did a nice little interview of him. And he sent me a note. He says, we got it made when Martha Stewart has picked us up. So what I did was not stopping there. I went and found Madeline Buiano's email and sent her a little note. I said, hey, you did a really nice job capturing the central ideas of Fletcher's creativity method. And that what you ought to do is talk to Martha Stewart's business partner, Snoop Dogg, and see if we can't arrange a meeting between Snoop Dogg and Professor Fletcher, then have you write the meeting report of what happened when those two guys got in the same virtual room watching sparks fly. I mean, I watched what happened when I put Fletcher in the same room as Peter Shaw from Immortal Studios, a Asian American movie house out in California. It was spectacular. We got invited to sit on their advisory board for studying their use of the hero's journey, which I thought was a pretty interesting outcome for that meeting, which came out of nowhere. So I sent that note up to the headquarters that we were trying to get Snoop Dogg to come out to our military college to be a collaborator and guest speaker program, and put the fear of God into them as they weren't sure if I was serious or not. And I'm not sure if I'm serious or not. If he'd come out here, we ought to have him. But anyway, it's interesting to note how much traction in the world Fletcher's material is getting. And I will just, shameless self-promotion here, that there's only one training program in the world that takes his detailed principles, the ones that he is using to train the Army and the Special Ops Command and the Air Force and the Marines, and applying it to traders with case studies. There's only one of those, and we've got it. So that's I think I'm gonna start that in April with a group of folks, and it's probably gonna be a 30-week course because we're gonna do it with all deliberate speed. There's a lot of material to go through, so there's actually no sense in waiting any longer. So I'll probably send out an announcement this weekend. What I think I'm going to do with that is, because there is there's probably a total of 40 lessons in there. There's 30 chapters in his book, plus the 10 myths and some background information that I'm going to throw in too. It's probably going to be 40 lessons in 40 weeks. And what I'll probably do is start a new cycle, a new cohort, maybe each month. We'll see how that works, so that people can start when they're ready, and then work together with a group as we go. We'll see how that goes. So anyway, I wanted to offer that to you. The link is posted in Patreon if you're interested in reading the whole story. I thought it was pretty cool. That is part of what I am thinking of as the trader's mind, this whole creativity piece. I think of the trader's mind as being a balance of internal and external pressures that creates a safe professional space in which your identity is clearly defined, and you establish your safe, trusted space for trading, that you incorporate all of these bodies of knowledge on the left-hand side in the performance of trading. For instance, I think it's sensible to combine the true storytelling work and stories from the heart of David Boji, my doctoral mentor, as a way to discover who you are in words and values. I would add protreptic coaching as part of that. The creativity and story science of Angus Fletcher, learning how to adopt other lenses and other points of view to freshen up your vision of what is actually possible. I think the work of Professor Andrew Huberman out at the Stanford Human Performance Lab is absolutely amazing on the science of gratitude, empathy, altruism, and how that can actually be developed intentionally. I think Dr. Tharp's work on state control, visualization, multi-mode experience encoding, and anchoring, all the psychological tips and tricks that we have learned from him are essential. And then I think I contribute modestly things like how to create and maintain the zero state, how to use anchors and triggers in your own life to achieve mental states, how to develop bulletproof game face with discipline and prep, and then how to use icons to manage your emotional and mental state, and the use of the owl meditation to process all of the emotions that arise out of the act of trading. So I would probably add systems thinking to this now. I ran out of space on the chart, but I think those are the elements that you need to be a resilient, robust trader for the long haul. There's probably emotional resilience in there as well. And then these exercises are really a quick start at how to begin developing some of these experientially. And these are part of the that creativity course. These are exercises I wrote that enable traders to begin applying some of the insights and lessons that come out of Fletcher's work. I'll go ahead and post that in Patreon for those of you that don't have a screenshot. So I just wanted to say that. I would be remiss if we didn't just toot our own horn here a little bit and say, you know what? That work that we did Monday on EPAM, boy, did that ever pay off. So one of the things that we did on last Friday was look at last Friday's signal and then built out a trade frame to use on Monday. And we worked our way through that. And then that paid off in a huge way on Monday with that great big directional move. The swing trade in turbo continued on day 3. And then day 4, just when you thought it couldn't get any better, it makes a 25% move today, all direction. So it went from 225 to 280 in one day. And I want you to remember the size of the risk box that we were using was $2. And so the green dots show the entries that we made on swing trades, which were paid for with turbo trades with markets money. And this is the swing trade view of hybrid trading, core and turbo trading. And then this is what that looked like today, starting with this nice gap up. And I used a $3 risk today. There's the $3 risk box from yesterday. And this thing did nothing but motor straight ahead, stayed above the VWAP a good long way after 3R in hand, second position, standard exit for about 4R, Standard re-entry on COTA 2. Another 3R gave one back. Standard re-entry on COTA 2 at a 1-2-3. I actually front run that a little bit and immediately got punished for front running. If I follow the COTA 2, I don't lose that. Hold support at the VWAP standard entry. This time I waited for the COTA 2. Got paid with the standard exit. Noticing a Z3 pinch occurring. Try the Z3 pinch, buying it on the button. Greedy. Get punished for scratch. Bought the Z3 pinch breakout, standard risk. Standard exit. So this ends up coming in about 8R or 9R for the day on the intraday portion. And then I'm all out on that exit. I just couldn't take it anymore. And it went up another 10 or 12 bucks from here. So when I combine those, what I essentially am doing is I am swing trading it one day at a time. When it opens in the yellow zone and moves in my direction, I add turbo positions intraday. I use the money from the intraday trade to fund additional overnight risk with a wider stop, so that I've built 3 positions going into today. And then that swing trade plus the turbo, I enjoy all the way up. And then I decide, you know what? That's just enough for me. When I look at the size of this retracement, it's like two-thirds of a retracement. And that felt pretty good. So I'm all out except for one fully funded swing position, which essentially is this first entry is still in first, last in, first out, that kind of approach. So all of that comes from the WMB3 setup, which triggered us here and which allowed us to participate in this pretty nice trade all the way through. So the WMB3 with the risk reward calculator in it is in the TC2000 bundle. And to me is worth the price of admission, because you can run that on any time frame and it'll recompute the reward to risk back to the 10-day high, which is also easily adjustable. If you want to adjust that setting the parameters is very easy in TC2000. So it's a very flexible layout, a simple layout, and allows you to manage trades pretty nicely at any time during the day, or rolling it into swing trades. And it'll scan 5,000 symbols in 10 seconds dynamically, and dynamically update the reward to risk ratios. So that ain't all bad. All right. So let's take a look at today. Yesterday we had seen the market holding support at the 10-day low twice, and made a slight gap up and a directional move that finished in the dragon and took out the previous day's high. So giving us like a 1, 2, 3 possible setup, vicinity the PSAR dot at about 427 today. So today it gapped up a little bit, sold off, and then resumed a strong upward move when the Fed announced, as expected, a 25 basis point rate increase, and the market responded to that very favorably. I also think the market responded to the fact that Biden's choice for bank or SEC regulation withdrew her name, and so it's going to be a lot easier for Wall Street, which is, of course, what everybody wants, right? So what we had was a continuation of the RL10 is looking strong. We actually got the The SSC entry today, if you take the price crossing through the PSAR as the entry point. So that happened today. Whoops, that happened today. So blanked my screen accidentally. Stand by. I want to notice, yeah, here was where that price went through the PSAR and closed above it, closed at the Bollinger Band mean, and now we're within a, tomorrow will be the 10-day high because this 10-day high here drops off. Now we're within shooting distance of Z1 and Z2 and the far side of the river and the floodplain. Price right now is now less than 10% off the top. It's at 9.21%. This is the all-time high up here at 480. So we're off 9.2% with the close at 435.62. Almost all good news today. The S&P was up 2.2%. Diamonds and treasuries were under at 1.5 and 1% respectively. The Russell was up 3.15, but the two big winners for the day were the Qs up 3.7, and then the relief rally of all relief rallies, 8% in emerging markets. That's a vast sigh of relief right there. Let's look at the sectors that outperformed, and there were many. So we had finance, Bitcoin, lumber, tech, and the other lumber at 3.2. Blended large cap crypto, consumer discretionary, Brazil up 3.5. We had Box Holdings is my proxy for crypto infrastructure. S&P Bio, marijuana, Ethereum, blockchain, clean energy, 6.7. Lithium, ARC, and moonshots, 7.5 and 8. Global future of finance, 9.5. The FANGs, 10%. Oh, that's a lot of money. Holy smokes. ARC, because that's all the uber large caps. ARC Innovation, and then individual companies, the individual targets. Robinhood, 15%, Squarespace, Rivian, and Coinbase, 12 and 10% respectively. PayPal, 7.5. Tesla, 4.5. Cliff, 3.3. Apple, 2.9. Alcoa and Microsoft, 2.5. So quite a run in all of the disruptors and the tech leaders. So that'll be something certainly to watch for going into tomorrow. This is one of the reasons, by the way, I don't hold, short positions in swing patterns unless they are 100% fully funded with markets money, because the gap and crushing move of one day like this could really ruin your day. On the downside, we had Simon Property Group, Mexico and Materials, 1.9 to 1.6. Wheaton Precious, Oil Exploration and Consumer Discretionary, down to 0.11. Excuse me. This is where we start getting into the negative territory, not much. Energy continues to give back. Oil down 0.5. Blended commodities 0.85. Agriculture in the VIX 1.6 and 10%. VIX still shaking off the suspension of trading from yesterday. Negative targets, not many. Devon Energy off 1%. U.S. Steel up only 2%. So almost everybody in relief rally mode. I still think that's way premature. This is one day of massive gains on a Fed announcement day, while the world's at war and we're still in, I think, bearish volatile conditions. So we're going to be cautious and careful on that one. The daily trade or the daily reports. Let's go to there. Oh, I had hit the wrong thing, but I just wanted to say BAM. I should have put that on the other one, on EPAM. We're still in bearish volatile, so maybe that's where the BAM needs to be. Hey, reminder, fellas, bearish volatile. Risk Z is still showing risk off. It is no longer abnormally risk off. It's kind of back within the plus or minus one norm. These signals here in the overreaction system are what you get in a bear market when indexes that have been crushed suddenly have what might be a dead cat bounce. So if we were to see weakness tomorrow, then this is where we would want to go BAM and look for weakness in the Dow, the mid caps, Euro-Asia, and Europe. Just a couple dojis today in the Dow, only a handful, 4 of auto framers left. And that's an Exxon Mobil because energy did not participate in the upside. Coke has just so much room to come back that it's still favorable. And then Chevron and Disney lagging somewhat today. Now, interestingly, Disney is still 2.3 to 1, even though it was up 3% today. That's how far it had fallen. In the ETFs, only one doji down here in oil exploration. Still a reasonable number of auto framers. Oil being number one on the hit parade. Here's the standard framing data for the auto traders. The auto framers, I should say. This is the one that I would really be studying for tomorrow, and that is the yellow zone trading, day one trading. None of them pinched at more than 2 to 1, but today's move was so extraordinary that you would not be surprised to see another directional follow through. And so again, we're thinking of the range minimum, the smallest move of the last 30 days, taking a third or a quarter of that as our start point for looking at manageable risk boxes. The R-stat column gives you the maximum reasonable intraday move. Yeah, and then the range average gives you the what the average move would be, and the range stat move is one additional standard deviation. So the standard deviation gives you the frog box. But you can see that if you took a quarter, let's just take XOP as an example. If you took a quarter of a $2.62 minimum range, you'd be around, call it, 65 cents, which is literally less than half of what the frog box is. So it turns out that a third or a quarter of the minimum range gives you a pretty handy little noise box as a start point for comparing. This would suggest also that Tesla manageable with about a $6 risk, which is slightly less than 1%. And it made a 5% move today. So you can get some astonishing intraday moves with that. Still a goodly number of symbols in the winter. But spring is now becoming the season of choice. Big, strong moves, Pfizer, Goldman Sachs, PayPal. But again, anything that's in the green here is going to be wonderful. And then anything that's in the 10-day green as well is going to be especially strong and a momentum play. That's the same logic over here with the ETFs. And Mexico's on my list right there. Maybe the strongest ETF of them all right now. All right, let's take a quick look at the trades from the team today. Just a handful. All right, here's John with the 5-minute Aussie. I like the short. I don't like being that far in the money and given back twice that. We let that come back more than a full R. The stop and reverse, pretty good scratch. The stop and reverse here was excellent. We could have considered a collapsing dragon here on the fact that the RL10 rolled up, couldn't even get to the dragon, much less the PSAR, and then rolled over immediately and made a new low of the day and took out the previous belly. That's the second one that you want. We might have made the same argument here for either a third or taking a second one if the first one didn't grab you. And then a 1, 2, 3 exit should be here. Or crossing the dragon here. This is kind of the last reasonable move. But if I take a look at this, at this box, this is probably 2 full R's on the give back, and that's too much. That would have doubled your work for the day. Just saying. Reasonable kata 2, good scratch, reasonable effort on the short side, good cover, reasonable long side, good cover, good scratch, and then you got worn out. And so somewhere in here is the other trade that got away. And keep your energy up and ready to trade all day. The only thing I might say in here also is that as you feel, the Z3 rollover and pinching, that maybe in here, maybe it's over trading, but you don't know that it's not going to do this, right? So as long as you're keeping these strict, it doesn't hurt my feelings. But this one almost feels like a fake 1 and go 2, because we had a nice tight squeeze and this thing broke down all the way past Z3 and then gives us that trade. Also, John, on the later on the Aussie, we're trading in the middle of the, but still that's a Z3 reversal. And then now you're playing for the fake 1 go 2, like I just told you. Good scratch, good reset, right by the numbers, waiting for it to break. Got paid. So we might have been here on the Z3 pinch excursion for a second one, or here on the second breakout, but that's a good exit. That's a good reentry. That's really good reentries with the second. And that's 5R for the win. Nicely done. No improvement possible. Notice again that fake one go to. That's why this one is still reasonable, because you're playing the fake one go to. But on the fake one go to, we can actually start thinking about a 1, 2, 3 entry, or taking it at the PSAR dot, which would give you an R of this instead of a great big fat R. And then this big move would have paid more than enough for this. As it was, it did not. I mean, the sooner you get into this, that if it fails, it's because it's coming down. So why not go ahead and get in with a tight box? And if it doesn't work, you're just going to be short anyway. Technique. Something to think about. All right, Griff with the SSC only. Let's check his oil. Naturally, he would have taken the PSAR flip, or the Z3 excursion, or the collapsing dragon, or the Kata 2, and gotten paid. And then the entry on this one is the exit on that one. So you get this trade. That's a good scratch. Tempting to stop and reverse right here, but he's not, because he's just demonstrating SSCs. But that is, when I see his chart tomorrow, I would be expecting to see that, because you think that first leg is going to repeat, and it kind of did. This is a good entry. Great exit management to get paid. Here was the possible Kata 2 reentry that'll appear on his charts. This is the second Kata 2 reentry that was possible. So pretty good technique. Arch on the 5-minute Aussie. I'd like to see the stop and reverse right there. Still, that would then be a good second position. Got paid. Good scratch. Good reentry. Got paid. Like it. Good shot. I think you got to stop and reverse here instead of here. Then that one gets paid. As it was, we turned both of those into losers. This is a pretty good Kata 2. This one was better. That's still okay. That's good. And he looks like he split his exit, half with the sniper, half with the PSAR. So this comes in at 3.7, and we can live with that, but there's some improvements in there. Okay, that looks like everything. Let's run the speed test. Is that everything? I think it is. So we're going to get ready for the St. Patrick's Day tomorrow. The soccer team is walking in our green uniforms. So we'll get this published and posted. I really think you should spend the time listening again to the WMB3 setup in EPEG, in that EPEG, and then watch the daily follow-throughs, and then today's massive payday. That was just too nice. All right, take good care, and we shall see you tomorrow.